Sterling Spotlight. So up to now, we only had soft data. What does soft data mean? Soft data means surveys. So various institutions, including the Bank of England, Market, an organization that publishes the PMIs, and other ones, they talk to investors, some talk to consumers, and they ask them, what are your intentions for hiring? What are your intentions for investment? And they ask consumers, are you going to spend more or less? How do you see your financial situation? So post-Brexit, all these surveys that came out, some of them, well, most of them in the thousands of people, consumers or investors, they were very negative, okay? So the PMIs, the most important ones, they drop to contraction territory. According to market, they imply a contraction in the UK economy, potentially a recession. So a big shock out of Brexit. Also consumer surveys, retail sales surveys, all of them were negative, okay? That's sort of the main reason that the Bank of England did what it did. Cut interest rates by 25 basis points, add 60 billion in normal QE, 10 billion in corporate bond buying, announced a new plan, the TFS, and did other small changes, everything to support the economy through the kitchen sink. That's why the pound fell. Finally now, 6 weeks after Brexit, nearly 2 months even, we get some hard data. What does hard data mean? What actually happened in the economy? So it's been a gradual warm-up. Yesterday we had inflation data, which is important in normal days for the Bank of England. Higher inflation means higher chance of rate hikes, lower inflation, lower chance of rate hikes. These are not normal days. Again, the Bank of England sees through this transitory inflation. So if prices, the pound fell some 10% against the US dollar and quite a bit against other currencies as well. So now prices of imports are becoming more expensive, but companies are going to absorb this, okay? Today we'll get employment figures. Again, some figures from July, some pre-Brexit from June. But tomorrow we have the most important figure, retail sales. What did consumers actually do? Not what they intended to do, not what businesses thought they would do, but what they actually did in the month of July. So that's the most important release. We have it tomorrow at 8:30 GMT. I think we'll have, as usual with the pound, I'll mention, the releases at 8:30 GMT. From around 8 GMT and sometimes earlier, we have these erratic movements. Markets are front running. Sometimes there's a leak, a rumor. Sometimes it's just sporadic reactions, stop loss triggers, and things like that. So we might have action even before the release. And then on whatever outcome, because we have no idea if consumers were really shocked and bought less than they were expected to, or continue doing what they do. Remember that some things you just need to buy food, you need to go out. You want to go out and dine some. You need some clothes. You know, if your car is broken, well, it's something you can delay, but things need fixing. Anyway, tomorrow we'll see if the shock of Brexit, something that clearly dominated the headlines that nobody could have avoided in terms of news, if it actually had an impact on what people bought and what they didn't buy. So I think it's a huge event tomorrow. It'll move the pound throughout. Well, I think also today and also tomorrow, of course, and also on Friday. Finally, it's what people actually did. Other things to note in this context of pound is that the Bank of England is the one central bank that had a big impact. Okay, Carney managed to kill, well, not kill, it's a harsh word, to send the pound down with the comprehensive package much more than expected. And this comes in a time when the Bank of Japan disappointed, the Reserve Bank of Australia cut interest rates and the Aussie strengthened, the Reserve Bank of New Zealand cut rates and the Kiwi strengthened. Draghi is losing his magic, so Carney, for me, remains he's my new favorite central banker. And yeah, so I think it's a big big release. It could be a make or break moment. So we had the pound falling and then recovering, currently at 130.25, 130.60, 131.50 are the lines to the top side, 130 of course to the downside, followed by 129.50, 128.50, and 128.40, and to the downside 127.90. That's the post-Brexit low seen a few days after Brexit. If the result is really terrible, I truly believe there's a chance we'll break below the post-Brexit low. That means the lowest in 31 years. And if it's a good result, we could gradually climb towards 135. So I think this takes a really high. Of course, it's not the only data point, but it's sort of the most important one. Consumption in the UK is about 60-65% of the economy, not as high as in the United States where it's 70%, but quite significant. Okay, so for me, it's clearly a huge event. Okay. Yeah, so that's our sterling spotlight.